Thank you for joining us on this edition of Business Daily, coming to you live from Seoul. I'm Hwang Jie, filling in for Lee Ji-yoon. And with that, let's get started with today's highlights. Dovish moves from the U.S. Federal Reserve as it scales back on its earlier forecast of additional rate hikes this year, citing the still slow global economy. Korea lands in the top ranks for financial development, shows an IMF report. The country's financial efficiency pushing it up the ladder. A dovish Federal Reserve has reduced the number of rate hikes for this year while keeping its key rate steady after a two-day meeting in Washington. Projections for growth and inflation have also been cut. Kim Min-ji has the details.
The U.S. Federal Reserve stayed pat, leaving its rate unchanged in light of uncertainty stemming from the global economy.
The committee decided to maintain its target range for the federal funds rate. This decision partly reflects the implications for the U.S. economy of the global economic and financial developments.
That means the current interest rate target of 0.25 to 0.5% will stay the same for now. Rates had been at near zero before the Fed decided to raise rates in December last year by 0.25%, marking the first hike in almost a decade. The Fed also revised down its growth forecast for the U.S. economy to 2.2% this year, down from its previous projection of 2.4%. The outlook for inflation was also cut to 1.2% by the year's end, down from a prior 1.6% call due to the prolonged effects of falling energy prices. But the Fed wasn't totally pessimistic about the U.S. economy.
Growth is expected to run somewhat in excess of potential, and with a continuing improvement in the labor market, I think we'll see upward pressure on inflation.
While the Fed said moderate economic expansion and continued job growth would accommodate rate hikes down the line, Fed officials are now calling for 2 hikes this year, down from the previously envisioned 4. On the dovish approach, Wall Street posted gains on Wednesday. The Dow Jones Industrial Average closed up more than 0.4%, while the S&P 500 added more than 0.5%, reaching a 2016 high. The tech-heavy Nasdaq rose over 0.7%. Kim Min-ji, Business Daily.
And to take a closer look at the Fed's latest move and what it means when it comes to Korea's monetary policy, we are joined by Professor Kim Seunghoon from Ewha Women's University today. Thank you so much for coming in today. So let's start off with how markets reacted. We've just seen the numbers, but just to give a recap, local shares closed up with the benchmark Kospi briefly touching the 2,000 level today for the first time in 3 months, and U.S. stocks also rallied. What do you think buoyed the markets today?
Well, Fed decision of not changing their interest rate means that Bank of Korea will have more rooms to decrease interest rate or delaying increase interest rate. So that is such a great news for private corporations because that increased their profits by reducing their debt. So that has been reflected in Kospi.
So the Fed is basically holding on to its stimulus campaign, as you've just said, and diverging less from other central banks like the ECB and the Bank of Japan, of course, that have recently introduced aggressive easing measures. Do you see a further boom in stock markets on the back of such policies like today?
Well, U.S. Federal Reserve interest rate changes and Japanese central bank and European central banks interest rate changes are also reflected in today's stock market because today's stock market is only a reflection of future expectations. So I don't see much changes of the stock prices in the near future that is affected by interest rate changes.
But at the same time, these easing policies continue to stoke concerns of a so-called currency war, which many call it a zero-sum game. Do you think the Fed's latest move would further heighten such concerns?
Well, I believe that personally that currency war or exchange war will be continued because between U.S. Federal Reserve and UK central banks, they are not much interested in stimulating their export through changing their interest rate. But we have totally different situation for the case of the European countries and Japan. They want to decrease the interest rate for increasing their export. So there will be another currency war between these two regions.
And you've already mentioned that the Fed's latest decision actually gives more room for Korea's central bank to cut its key rate. And actually, some analysts have been calling on the BOK to cut the rate even further, facing such global monetary easing and to join the easing move. Do you think it actually does? What do you think what do you see in the near future in terms of the BOK's key interest rate?
Well, Bank of Korea's standing point on interest rate is very solid. What they're arguing is without structural changes of the Korean economy, they can decrease the interest rate because it doesn't have any effects. But in the near future, Korean government will decide on structural reform on Korean private corporations. So after that, in the first half of the 2016, Bank of Korea will think of decrease the interest rate.
But won't that further exacerbate concerns of massive capital outflows from Korea?
Exactly. However, as you said, we have to have certain gaps of the interest rate between United States and Korea and Japan. If we decrease interest rates seriously, there will be serious outflow of the funds or money from Korean financial market. So for avoiding that outflow of the funds, there is some certain limit of the Bank of Korea to decrease interest rate further.
Right. I mean, speaking of future changes on key interest rates, let's go back to the Fed. So it signaled that it will delay raising rates, but it also emphasized that its plans are not derailed. So when do you expect the two rate hikes to come?
Well, that really depends on actual progress of the U.S. economy. But according to surveys between U.S. economists, there is the highest possibility of the interest rate hikes in the June of this year, and that the size is going to be like 0.25%. So taking a broader perspective, the Fed's Wednesday's decision is mainly stemming from the weakness of the global economy, and we've seen very unstable financial markets early this year. Do you see things heading upwards, or are we still stuck in this gray area of uncertainty? Well, there's no question that U.S. economy in the phase of the economic recovery. However, this time U.S. Federal Reserve showed something darker views on U.S. economy in the future. So according to recently updated figures from U.S. Federal Reserve, U.S. economic growth rate of this year expected has been decreased from 2.4% to 2.2%.
Right.
And the inflation rate of this year expected has been also decreased from 1.6% to 1.2%. So that's why they decide not to change the interest rate.
But would that further darken the outlook for the Korean economy as well? I'm pretty sure it would, because Korea is heavily reliant on exports. But what's your take on that?
Well, Korean economy is pretty much hooked up to slowing Chinese economy these days. Because of the slowing down Chinese economy, their growth rate has been decreased down to 6% level these days. So we have serious decrease of the export for 9 continuous months. So without booms of the Chinese economy, it is very hard to increase our export.
All right. Thank you so much for your time today, Professor.
My pleasure.
Korea ranked 6th in the world in terms of financial development. This is according to recently released figures from the IMF, which gave the country high marks on efficiency, among others. Park Jong-hong reports.
The latest IMF index puts Korea high on the country list for overall financial health. This is based on a working paper by the International Monetary Fund released in January, covering a broad range of financial indicators. The paper, which looked at 2013 data, noted that Korea ranked 6th in the world, behind Switzerland, Australia, Britain, the US, and Spain. The study observed the financial development trends of 183 countries, looking at three key factors: financial depth, access, and efficiency, and was measured by a score range of 0 to 1, with 1 being the highest possible level. Until recently, the IMF had used only the financial depth category to reflect the scale of a country's financial sector compared with the real economic activity. This is the first ever broad-based evaluation by the IMF, although it's not an official release. The subcategories of assessment included the portion of pension fund asset per GDP, return on assets, the aggregate value of listed stocks compared to the GDP, and so on. The Bank of Korea said Korea's Financial Development Index of 0.854 is far higher than the OECD average of 0.667. In particular, Korea ranked at number 1 for financial market efficiency, receiving the highest possible score of 1.0, which measured the turnover ratio of listed stock. These results are in stark contrast to an assessment made by the World Economic Forum last year. While the latest report puts Korea ahead of the pack, a BOK official noted that the figures should not be overestimated, as they lack variables like financial innovation, diversity of service, and globalization. Park Jong-hong, Business Daily.
The Korean government is stepping up efforts to cut carbon emissions by making investments in related technology. The Science Ministry says it will increase its budget by 10% from last year to $45 million. The ministry also plans to invest in the development of solar panels, fuel cells, and the making of bioenergy fuel technology. Last year, the government announced plans to cut Korea's emissions levels by 37% by 2030. Some apartment complexes in Vietnam are starting to look like they've been transplanted directly from areas in Seoul. That's because Korean builders are jumping into the Vietnamese market to expand their presence. Our Lee Ji-young takes us to Hanoi to give us a glimpse of what one particular construction firm is doing.
An apartment complex familiar to the Korean eye can be spotted right here in Hadong, a large suburb near Vietnam's capital of Hanoi. It's a brand from Hyundai Engineering and Construction known as Hillstate. Equipped with a swimming pool, an indoor golf course, and a gym, the homes cost roughly $1,400 per square meter with monthly rent of $800, more expensive than market price. But Hyundai says out of 1,000 units, 95% have already been sold to local residents.
I think the apartment was built with people's lifestyles in mind, and I'm happy to introduce the place to others.
The popularity of Hillstate reflects a broader trend in which apartments built by other Korean construction firms are also in higher demand because of their designs and better quality. Facing a lack of supply for homes because of a booming population, the Vietnamese government has been turning to builders in countries like Korea to ease overcrowding and give people more options. In the case of Hyundai, though, it's not just looking at homes. It also opened a vocational school called Dream Center in Hanoi late last year. Jointly established with Korea International Cooperation Agency, or KOICA, the school aims to train 50 automobile mechanics and up to 1,500 experts in construction every year in an 18-month program. It comes as part of Hyundai's global corporate social responsibility effort that offers vocational training for use in underdeveloped regions.
We are being trained in construction safety here. Since the work can involve a lot of falling objects, we need to learn how to protect ourselves.
The new Dream Center in Hanoi is the fourth one of its kind, following centers in Ghana, Indonesia, and Cambodia. Lee Ji-young, Business Daily.
And that brings us to the end of our show. Thank you for watching. We'll be back at the same time tomorrow. Goodbye for now.